Data released over the European session.
Relatively quiet in terms of significant data today, Nick, but I picked out three things that have caught my eye. First of all, German producer price index numbers for April. Looking here at the year-on-year measure, down by 1.5%. So slightly weaker than forecast, which was a negative 1.4%, though better than the minus 1.7% we saw in March. But as with the Swiss numbers, which we talked about recently, they are suggestive that deflation isn't going away from the Eurozone, and in this instance in Germany. So the ECB, has a good reason to continue with its QE policy, and they will definitely want to see at least a modest positive number for some of these things going forward of this year and the early part of 2016. Staying with the sort of central bank theme, and this has been the big theme really of this week, we've had the Monetary Policy Committee minutes here in the UK today. Just the people aren't aware, these are the notes basically that are kept after every Monetary Policy Committee meeting, and they just give you a flavour of what the members of that committee were thinking. No surprise to find that the members voted 9-0 to keep rates and QE on hold. Rates at 0.5% and QE where it is at 375 billion spent so far. Same as last month, two of the members of the committee were finally balanced. A couple of the comments that sort of attributed to the minutes as well. The bank felt that inflation could pick up quite sharply towards the end of 2015, inferring that we shouldn't worry too much about the deflationary number we saw yesterday, and that GDP for Q1 could be revised up above that very poor figure we saw earlier in the month. Not uncommon for GDP numbers
revisions.
Backwards.
Quite interesting, this deflation that everybody's telling me that, this is a very short-term scenario, and we'll be back to normal inflation over the next 12 to 18 months. Are we being just a little bit?
I'm unfortunately, I'm in the camp actually that believes that once deflation gets a foothold, it's very difficult to wring it out of the system.
Couldn't agree more.
And that there are structural reasons behind it.
Yep.
Because just the way that the modern world is set up, prices are flattened, margins in businesses generally being compressed, and there are lots of things that are driving down prices and hence creating disinflation or deflation in the worst case. And I don't necessarily think that it's that easy to get rid of. I think the marginal figure we saw this week from the UK, as I said that's yesterday, I think I said this could just turn out to be a statistical error, so we shouldn't read too much into one data point. But if it became a trend, then I think we'd need to take a step back and think about how to get rid of it completely.
Just repeat, equity markets don't like deflation. In terms of Japan, what's going on there?
Surprising, perhaps to some extent, we've got some very good Q1 GDP numbers from Japan. If you look at that measure, GDP growth on an annualised basis, it rose to 2.4% per annum, or if you prefer to look at it in the way that we do here in Europe, it was 0.6 plus 0.6 on a quarterly basis, but either way, well ahead of forecasts, which on an annualised basis were for plus 1.5% or plus 0.4% in terms of the quarterly measure. And interestingly, it's been put down, or the gain has been put down to household and business spending. Not too surprising about the business spending, but Japan's had a reputation of being very conservative and a big saver for the spenders as far as households are concerned. So it's interesting to see consumers coming out and spending money, and that's the kind of trend that the government and the Bank of Japan will be looking to see more of going forward rather than less.
Understood.